Hello and welcome to another update video about Bitcoin. So in this video we want to talk about the different counts which are now possible for Bitcoin, the different scenarios based on the higher time frame price action, and then I'm going to do a bit of a deep dive into the lower time frame price action as well. So first of all, let's take a look here at let's call it the default count that I have on the chart, the default Elliott Wave count. We'll start here with the June price action because this is highly relevant. Just to highlight again, it is not yet confirmed at all that the bear market low was in. As per Elliott Wave, I always need 5 waves up and 3 waves down for at least 2 levels of confirmation. We haven't even reached the first level. Because of the June low, the move to the upside could simply be an A wave. The move down could simply be a B wave. You can see that because this is a clearly corrective move. And this is also a clearly corrective move in 3 waves. Very choppy that was. And if we're now moving up in a so-called C wave in 5 waves, you know, we could break down and carry on with a bear market. Yeah. Very, very important for that. We don't necessarily need the yellow count. It could be that we do A, B, yeah. And then we had here a 1, 2, 3, 4, 5 in a C wave. After we had here an A wave. Here we had a B wave. Here we had a C wave of wave 4. Because this was the wave 3. And if we now, in the next step, break below the 20k level, it would indicate that we continue with the bear market in 5 waves, yeah? And then make a low below the November low. Now that is the bearish count. That's absolutely still possible. Even here in the bearish count, we could still push higher. Yeah, and we could even do this yellow 4 and 5, and it could still count as a 5 wave move, and it could still be a wave C or 4, and we could still break down. Yeah, and that is why in Elliott Wave, which is one of the strengths of Elliott Wave, we need 5 waves up and 3 waves down. So we need those 5 up here, and I need the ABC structure, ABC, to hold a wave 2 support to indicate that the bear market low was in. Ideally, we then even need one more step, which would be a break above the wave 1 high. Yeah, so because in a bullish count, the yellow count here, I would be looking at 5 up, 3 down in a 1-2 setup, and then a break above the wave 1 high. Then we have 3 levels of confirmation. But okay, you don't need to wait until you have that confirmation to trade, of course. That's purely just when we can say the bear market low was in. So this is sort of the imminently bearish count and scenario that would allow us to understand that we carry on with the bear market. Which means, consequently, what we need to do, should we now break below 20k, we also need to check if we hold a wave 2 support level. Because what I cannot rule out is that this wave 5 here was already in here. I would prefer another 4 and 5, but I cannot rule out that the 5 was in already, or is going to be in if we just push a bit higher. So we first, when we break down now, we need to check, do we hold a wave 4 support, which would be a rather shallow one, and do we hold wave 2 support, which would still be a bit lower, but again, already below the 20k level, it will increase the probabilities that the bear market continues. If we, however, hold a wave 2 support, which is a bit lower, and I can't really give you the level yet because I don't think we've peaked yet necessarily. We could have, yeah. And if we can see that things are turning around, we don't hold wave 4 support, I will give you a wave 2 support level. But at the moment, it's just too early for that. I will have just boxes on the chart, boxes, which we don't need. But it would be the 78.6 FIB of the move to the upside. So that's what we need to watch. Yeah? And if we hold a wave 2 support, it indicates the bear market low is in. If we hold wave 4 support, it means that we probably get one more high here in the wave 1. Or in the C wave, whatever it is, of 4. So that is sort of the two scenarios to watch out for. What else do we have? Yeah, so it could be just very simply that we have only 3 waves up here and we get a fourth and a fifth, or we have 5 waves up. And that means now in any pullback which is coming, we need to be watching first, do we hold wave 4 support? And I'm going to take the green box out now. Or do we hold wave 2 support? Or do we break through? Yeah, that is sort of the nature and the depth of the next pullback will give us a clue about if the bear market low has been in or not. So that's very critical. One viewer sent me a count and he asked if I could take a look at that in this video. I'm not going to share it, but I'm going to show it to you on a screen. It basically is in line with my count, so I don't really see a major difference there. The count that I was sent is here also a 1-2 setup. Then the 3, the 4, and the 5. Basically, the only difference is that the analyst put the green wave 3 here, the green wave 4 here, and the green wave 5 here, and the yellow wave 3 here, the yellow wave 4 here or here, and then there would still be one more 5. So very similar to my count, and as I just said, it could very well be that, one sec, it could very well be that this is the case as well, yeah, and that what we had here was the yellow wave 4, that we don't get another 4 and 5 in yellow. That's just the nature of it. I mentioned to you, I do it this way, yeah, in previous videos. I will not leave the green wave 3 here, and instead count everything that was moving up here as an extension of the green wave 3, because this wave 3 that this wave 4 that we saw here on the 18th of January in that period was just too weak for the increase that we've seen from experience. So not by Elliott Wave rule, so from an Elliott Wave point of view, to put the wave 3 and 4 here is absolutely fine. I mentioned to you that it's my experience that tells me that it would be extremely unusual to have that green wave 4 here, because it was basically too shallow. Now again, this one was now very shallow as well, and that is why this is not an ideal count. And that's also why I mentioned to you in yesterday's video that I see the risk coming here. Yeah, because if we don't get a strong pullback anywhere and it's just carrying on and we get these running flats, it increases the risk that we're going to break down eventually, because Bitcoin cannot recover the indicators and so on. Of course, it's only, you know, it's not guaranteed, but that's why I decided to put that wave 3 here. The other count is possible as well, and that's why in any pullback I'm watching now if we hold that wave 4 support or if we hold a wave 2 support, because it could be finished now. What I can tell you just from the structure is that it's getting risky up here because we didn't get that deep wave 4 pullback. Now, saying that, I will now count every pullback probably as this yellow wave 4 if we get it first. Yeah, so hopefully that made it clear where we are. I know it's a lot to take in, but unfortunately markets are complex and I can't show you only one scenario. I know that would be easier, but it wouldn't reflect what we've got here. And also want to bring in my strategy, right, which I explained in the last video. Okay, and now we've reached the next target for Bitcoin here in the short term. Actually quite nice, yeah, yesterday worked out well. We reached the first target, we reached the second target, and we bounced off from both of them. This was a first reaction to this support area, but only a weak one so far. So zooming out here again, the idea is that we could put the wave 3 here, which was here on the 21st of January. Then we had the wave 4 finished here actually, yeah. Because I have to recognize that the market doesn't want to put in that deeper green wave 4 that I wanted. And we also pushed higher. So basically the minimum expectation here is fulfilled for this green wave 5. It doesn't need to push any higher. Could be in, but that ultimately depends now on the lower time frame. So if the lower time frame count, oh, sorry, made a mistake, wave 4 here. If the lower time frame count now holds this green support area, which goes all the way down to basically 22.9k, then we can carry on here in an extension of the fifth wave in green. And minimum expectation here for the wave 3, based on the current low, would be to reach the 1.618 extension. And that would be at 25.7k. That's still possible, but condition is that we're holding this support area and then break out of the channel to the upside. That's what I'm watching, and if we, very simply, if we lose the box, then I will assume first that we are in the yellow wave 4. And I will have to see if we hold wave 4 support. But yeah, other than that, not much to add here to the last video on the micro level. This is pretty much what we talked about, and I'm glad that both support areas did hold so far. But it doesn't look like that this C wave, if it is one, is finished yet. And also, we've really only touched that lower support area there. So it could very well still come down a bit lower. That wouldn't be a problem. That would not damage the count. But the way this seems like we can try to put the subwaves in here. Again, bear in mind this is micro counting, not so reliable and so on. But this is going to become a 5-wave move here. So it could be a C wave of 2, yeah, but it could also be something more bearish. But at the moment I would count it as 1, 2, 3, wave 4 triangle here probably. Or here. A, B, C, D, E, yeah, wave 4 here. And then that we are now in a wave 5, 1, 2, in whatever shape or form. Could be finished, but the price action doesn't suggest it yet necessarily. If we break above the wave 4 high, which is here around 23,600 on the very micro level, it would suggest that a low has been made here already for that fifth wave of C of 2. What would be the ideal target here for the C wave? Take the length of the A wave, go to the high of the B wave, and the 1-to-1 ratio was reached, so we could be finished. The next key target would be the 1.618 extension at basically 23k. So let's see if we actually get there. It would be a very long wave 5, looking at the proportions. But we can also look at a different target by taking the length of the third wave, go to the high of the fourth. That would also take us round about to, first of all, 23,245. So I'm going to add that target here on the chart. The 1-to-1 ratio would take us to 23,030. And the third way of measuring target would be to take the length of the wave 1 here and to go to the high of the fourth and look for the 1-to-1 ratio and the 1.618 extension. This would take us to 23,150 and also 22,900. So, I mean, to be honest, there's no point putting all these on the boxes because they fill out the entire box. So there's no confluence here. So watch out for this support area. And if we hold it, then we have a good chance to put that third wave in. If we break below it, it could be that the wave 5 in green was already in and the wave 3 in yellow, the large one, and that we're already heading down in the fourth wave or in something more bearish, yeah. And that is something that the depth of the next pullback will tell us. Okay, this is my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.